Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Sanjana Prabhakar. She is index research specialist with Nasdaq Investment Intelligence to discuss performance and trends in the Nasdaq 100 index as it recorded its 5th consecutive month of gains. Sanjana, it's great to see you as always. Welcome back to Trade Talks, and certainly a different picture than we saw in 2022.
Yes, absolutely. So as you mentioned, quite a different picture from 2022. We wanted to provide a check-in on the year-to-date performance and highlight the stellar outperformance of the Nasdaq-100 versus other broad-based benchmarks. My colleague Sarah was on Trade Talks earlier, where she mentioned that the Nasdaq-100 posted its best first half in 40 years, pretty historic, recouping its losses caused by the Federal Reserve rate hikes. She had looked into sector specifics and technicals. This time around, we are looking at the year-to-date outperformance through a slightly different lens. We're looking at the overarching themes that contributed to the outperformance, as well as some company-level highlights.
All right, Sanjana, let's get into the fundamentals here then with your first slide. What were some of the drivers of year-to-date performance?
Sure. So as you can see in the first slide here, the Nasdaq-100 is up 44% year-to-date as of last Friday, significantly outperforming the S&P 500, the Russell 2000, and the Nasdaq Q50. If you look at the margin of outperformance, you see that it's outperformed by a margin of 24 percentage points, 30 percentage points, and 32 percentage points over the indexes that I just mentioned. And keep in mind that the month of July was the 5th consecutive month of gains, so that was pretty impressive. And the two charts here tell a pretty powerful story. We have the first half of 2023, which offers a pretty sharp contrast to the environment in 2022, where all indexes were down. This year, as we have been hearing widely in the media, inflation readings in the US moderated, in some cases ahead of expectations. As a result, the Federal Reserve skipped its first opportunity to hike rates since the current rate hiking cycle began in March 2022. And what this performance really illustrates and what we wanted to communicate is that solid fundamentals remain in much of the economy. We now have a massive new secular growth driver in AI, which has been making headlines and has raised the possibility of a new bull market. And big tech surprised to the upside in the first quarter of 2023 and has largely beaten expectations in the most recent quarter as well, with Amazon emerging as the clear winner. And we wanted to go into some more details in our next slide here regarding how earnings played out and how big tech is leveraging AI.
Well, let's take a look at your next couple of slides here. Break down the tech performance in earnings and let us know what you saw in earnings that really led to the surge in stocks.
Yeah, sure. So as you can see in this slide here, we have captured the top 3 outperformers of the mega cap tech companies, including NVIDIA, Meta Platforms, and Amazon. You see NVIDIA up 211% year to date, reversing its 2022 losses of 50%. And this company is broadly seen as the biggest winner of the AI boom. It's tripled its performance this year, has had record data center sales, and demand for its chips has really accelerated. And if you look at Meta Platforms, that's registered pretty impressive year-to-date performance as well, up 158% year-to-date, also reversing its losses from the previous year. This year has been a pivot towards efficiency, as the CEO has called it, and many announcements from the company have caught the public eye, including the launch of Threads, which is a groundbreaking app similar to Twitter that has had quite a remarkable opening. And keep in mind that prior to the first quarter, revenue had actually declined for 3 straight periods as the company was dealing with a weak economy and IOC privacy changes. And as mentioned, Amazon has been the clear winner from the most recent earnings. It has posted pretty strong returns, and now there's a focus on AWS stabilization as well as higher profitability in its core e-commerce business.
All right, and let's take a look at the message from big tech. You're saying it's slow and steady.
So in our next slide here, we have captured
I'm sorry. Actually, I skipped ahead of you. Let's go through these last 3 earnings. My apologies.
Sure. So this slide here has the performance of Apple, Alphabet, and Microsoft, which have also posted impressive double-digit returns this year after being down last year. If you look at Apple, its market cap briefly touched $3 trillion this year, end of June, and it has made pretty significant announcements this year as well. It has announced that it's planning to double or triple its investments in India. You look at Google, sentiment from its recent developer conference was pretty positive, and it has also posted better than expected quarterly results. Microsoft had its valuation go up by nearly $800 billion this year. It's largely seen as the company with first mover advantage with generative AI by way of its partnership with OpenAI. So as mentioned, big tech has largely surprised to the upside with much of the focus now on investments in AI.
And finally, let's take a look at your slow and steady theme here.
Sure. In our final slide here, we just wanted to capture the broad tailwinds from AI that we are seeing in a resilient economy. I think we will be hard pressed to find a newspaper that isn't talking about AI today. And what recent earnings from big tech has suggested is that AI adoption is likely to be slow and steady. We believe that going forward, there's going to be much positive sentiment accruing from AI. We are also hearing talks of a soft landing that is now even more likely than before. And despite 11 rate hikes by the Federal Reserve, we see the US economy remaining quite robust. Overall, additional momentum to overall returns of the Nasdaq 100.
All right. Appreciate the insight, Sanjana. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.